Okay.
Hello everybody, my name is K. Ajita. Today the topic of my presentation is standard costing. Then standard costing is the practice of substituting an expected cost for an actual cost in the accounting records. So the difference between the expected and the actual cost of standard costing. Then first of all, difference between standard costing and estimated costing are as follows. Then standard costing and estimated costing. First one is it gives on what should be the cost. It that what will be the cost. Then second one is it uses the parameter efficiency. It uses the perception efficiency applied. Then third one is it is revised at frequent intervals. It cannot be revised need of revision. Then fourth one is it is ascertained on the assumption that free movement of cost allowed. Then it is an ascertained assumption that free movement of cost. Then fifth one is it is more stable in nature. It is a more flexible and change at very change of situation. Then sixth one is it is a reliable tool of cost control. It cannot be used as a cost control. Then seventh one is it is used only when complete cost data are available. It can be used in every situation. Then eighth one is it is used for finding variance. Then variance cannot be finding out from the estimated cost. Then ninth one is scientific basis is applied to set standard cost. There is no scientific basis used but only approximation are used to set estimate cost. Then 10 to 1 is it is applied if the organization standard costing system. It is applied in every business organization. Then secondly, difference between standard costing and budgetary control. Then standard costing and budgetary control are based on the principle can be controlled supervision and responsibility that focuses controlling cost by comparing actual performance and the parameter. However, the two systems neither similar nor independent. Then standard costing variance between actual cost and the standard cost along with the reasons. Then basis of comparison, standard costing and budgetary control. First one is meaning the costing method in which evaluation of performance of activity comparison between actual and standard cost. Budgetary control is the system which budgeted or prepared continuous comparison and the MAD between and budgeted figures. Second one is basis determined on the basis of the data related to production, then budgeted or prepared on the basis of management year plans. Then third one is range. It is a limited cost. It includes cost and financial data. Then fourth one is concept, unit concept, total concept. Then fifth one is scope, narrow, wide. Then sixth one is reporting of variance, yes, no. Then seventh one is effect of temporary change in condition. The short term will not influence standard cost. Then the short term changes will be shown in the budgeted cost. Then eighth one is comparison actual cost and standard cost of actual output, actual figures and budgeted figures. Then ninth one is applicability manufacturing concern all business concern. Then thirdly steps for established in standard costing. Then first one is establishing standards are to be set on the basis of management estimation. Production engineer anticipate the cost in general more wide given the past data, current plan of production, future trends fixed in both quantity and cost. Then second one is determination of actual cost. Each element that is material, labor, overhead determined from invoices, wage sheets, account books and so forth. Then third one is comparison of actual cost and standard cost. Next step to the process, compare the standard cost with the actual figures, ascertain the variance. Then fourth one is determination of causes. When the comparison is done, next step to find out the reason for the variance, take corrective action, evaluate the overall performance. Then fifth one is disposition of variance, the last step to the process disposition of variance by transferring costing profit and loss account. Standard costing can be helpful in ascertaining the profitability of the business at any level of production, further useful in practical management functions, that is planning and controlling. Thank you.